So where are all the foreclosures in Hawaii? We don't have any, and we don't expect any in the residential market through 2021 here in Hawaii. And here's 5 reasons why. Number one, nobody wants them. We learned some lessons during the financial crisis from 2009, and there are clear benefits for the general economy to avoid foreclosures. The federal government doesn't want foreclosures. They implemented a foreclosure moratorium. That means banks are not even allowed to foreclose during COVID. And banks don't want them either. They had their hands full back from the financial crisis with their foreclosures back then. And instead, this time around, banks have been offering deferment programs and forbearance programs where borrowers can skip their payment and tag it to the end of the loan. So what happens when this sugar pill wears off and the programs expire? And that's where people scratch their heads and go like, things are going to unravel and potentially fall apart. But not so fast. We don't think so. Because, and this is reason number 2, this real estate market here remains incredibly strong. We are on a tear, and we are on an extended run that has been lasting 8 years and has continued throughout COVID and is expected to continue throughout 2021. Why? How could that be? So when COVID started, we were a little nervous. We thought, we don't know what's going to happen here. But a couple things fell into place, which is reason number 3, a monetary policy, which is set by the Federal Reserve Board, which has been hugely accommodative since COVID started. And the Fed expanded the money supply and lowered the federal funds rate down to 0 and communicated a commitment to keep the accommodative stance, accommodative monetary policy in place, possibly through the end of 2023. Now that's huge. This makes borrowing money more affordable and encourages spending to boost the economy. Number 4 is fiscal policy, which is set by Congress and the administration. And both monetary and fiscal policy, they work in tandem and help with the economic recovery. And currently, today is February 17th. They're discussing a $1.9 trillion stimulus bill, which will boost the economic recovery. So number 5 is record low mortgage rates. We've never seen rates this low before. And these record low rates drive housing affordability, which drives demand and as a result, supply diminished. So let me demonstrate the point. I looked it up in the end of 2019, the end of December 2019. Mortgage rates, 30-year fixed rate was at 3.74%. Then the end of 2020, it dropped down to 2.66%. That is an increase in affordability by a margin of 12.77%. That means today you can buy a house that is 12.77% more expensive with the same cost of monthly mortgage payment. That is huge. Now, we've seen some neighborhoods where property values increased by maybe even 10%, but that increase in property values during the last year has not been catching up with the increase in affordability. It means we expect throughout 2021 prices to move up higher. Now, we don't have a crystal ball, so we'll see how it pans out, but that's how it looks right now. So monetary policy, fiscal policy, record low mortgage rates. And let me talk about mortgage rates. In effect, the money is free. Yes, you heard me say it. It's free. If you take a mortgage rate at 2.66%, most people have about 30% deductibility, federal and state taxes, so 2.66%. Take 1/3 off and the rate drops to 1.862%. Rate of inflation is around 2%. In fact, the Fed has been trying to push inflation even beyond 2% for an extended period of time. So let's call it 2%. So 1.862% minus 2% inflation drops the real cost of the money to buy a house, the real rate for a mortgage after inflation and tax deductibility, down to minus 0.138%. That's below zero. It's free money. So no foreclosures in Hawaii. So in conclusion, a distressed property owner has several options. I'm going to call it 3 options. Number one, they could just sell the house. Market is strong. For sure, they would have some equity in it, so they could pocket the money and downsize for now. Second option is, if they don't want to do that, they could contact their service provider, mortgage service provider, and work out a continued deferment extension. Lenders most likely will prefer that over foreclosing. And third option, if somebody really has no equity in the house, which is very rare in today's market, then call your lender and work out a short sale. That's still better than foreclosure. So that's it. So what could go wrong? Well, a few things could go wrong. So for that, go to hawaiiliving.com/blog and check all the updates. Mahalo.